What's up guys? In this video, we will talk about 3 methods for purchasing a house with no upfront payment whatsoever. You won't need to put any money down. It's completely cost-free. You buy the home and move right in. I'm not exaggerating. I've personally used these methods twice. Stay tuned. Hello, I'm an Evangelista, a New York City tri-state area real estate agent. I make videos geared towards providing you with the tips and tricks you need to make great financial decisions and create wealth through real estate. Make sure you hit the subscribe button to stay updated on my latest content. Today, I'll cover 3 ways to buy a home with no money down. While there are multiple ways to achieve this, I'll focus on the 3 most common approaches. I've personally used one of these methods twice, and I've helped with the others. The easiest way to buy a house with no money down is to use a government-backed mortgage. These mortgages are specifically designed to stimulate growth in specific areas of our community or to assist certain groups like veterans become homeowners. While there are quite a few first-time home buyer loan programs out there with 0% down available, let's talk about the 2 most common options. The first option is the USDA Rural Development Loan. The U.S. Department of Agriculture, USDA for short, offers a 100% financing mortgage known as a Rural Housing Loan or USDA loan. Contrary to its name, the good news about this loan is that this loan is not limited to rural areas. In fact, many suburban neighborhoods qualify. For example, take a look at this map over here. This is a screenshot taken from the USDA loan eligibility website, which you can zoom into on any given region within the United States and see whether or not a USDA loan can be used for that area. This is a map of my home turf, the New York City tri-state area. And while most of the map is covered in orange, meaning a USDA loan cannot be used in these areas, what you will notice is that the outskirts and pockets within the tri-state area are in fact eligible. If you take a closer look, you'll notice I have even placed a pin in one of the most desired neighborhoods in the Westchester County, Rye, New York, in which a certain section of this great neighborhood is eligible and qualifies for a USDA loan. And there are many other places just like this, not just in my region, but also in yours. The USDA aims to assist low to moderate income homebuyer, and its eligibility reaches about 97% of the country's landmass. To qualify for a USDA loan, you just need to meet the following criteria. You will need a minimum 640 credit score, a debt-to-income ratio below 41%, 2-year employment history, and as demonstrated in the map before, you must be buying in an eligible area. Additionally, your income must be below 115% of the area median income. For context, using the Fannie Mae Area Median Income Lookup tool, which can be found online, we can see that the required 150% income limit for Rye, New York sits around $120K per year. You can find both the income lookup tool and the USDA loan eligibility map links in the video description below. Now, let's discuss the VA loan, which I've used twice. This loan is exclusively available to veterans and is backed by the Veterans Association, the VA. Like others, it allows you to purchase a home without any upfront payment, but the maximum purchase amount you can qualify for depends on the county you're buying in. Keep in mind that having a high maximum VA entitlement does not guarantee approval for a loan. Lenders will still assess various factors, including your personal income and credit history. Most veterans, active duty service members, and honorably discharged service personnel are eligible for the VA program. Home buyers who have spent at least 6 years in the reserves or in the National Guards are also eligible, as are spouses of service members killed in the line of duty. An interesting aspect of the VA loan is that your entitlement isn't tied to a single property. For instance, if your maximum entitlement is $600,000, you can use it to purchase multiple properties as long as their combined cost does not exceed your entitlement limit and abide by all qualifying criteria. In addition, VA loans charge no ongoing private mortgage insurance or PMI. There's only a one-time funding fee that can be rolled into your loan, which is a serious benefit, as it could lower your monthly payments by a few $100s in some cases. Finally, VA mortgage rates tend to be the lowest of any home loan program. This is usually the cheapest mortgage option for eligible veterans and service members. To get started with your VA loan, visit your VA benefits website and download a copy of your COE, your Certificate of Eligibility. This is a document your lender will need to get started with your VA loan application. Moving on, the last method for purchasing a house with no upfront payment we'll talk about today is the FHA mortgage program. The FHA loan is a great option for first-time home buyers with lower credit scores. This program is backed by the Federal Housing Administration, and it's famous for its more relaxed approach to credit scores and down payments. For context, with an FHA loan, you can put just 3.5% down as long as your credit score is 580 or higher. By contrast, a conventional mortgage requires only 3% down, but you need a FICO score of at least 620 to qualify. And according to FHA guidelines, you could even get a mortgage with a credit score of 500 to 579, as long as you can put at least 10% down. But in practice, it's harder to find lenders who will allow a FICO score below 580. While FHA loans typically require 3.5% down payment, payment, and it is true that most home buyers will have to put at least some money down, the good news is this: the money doesn't have to solely come out of your pocket. There are multiple ways to source your down payment. And since this video is all about no upfront payment options, we'll talk about two of these options. The first way to source your down payment as a home buyer is to have this amount gifted to you by family members. This enables you to move into your new home without putting any money down, and it is as simple as getting a gift letter from the donor. However, do note that the lender will want to see a clear paper trail indicating the source and timing of any and all deposited gifted funds in your account. So make sure your donor is prepared to provide bank statements and or any other documentation requested by the lender. The second way to source your down payment funds as a home buyer is to apply for cash assistance offered by state and local governments. These down payment assistance programs can help you buy a house if you can't afford a down payment out of pocket. Some home buyer assistance programs offer up to 5% or more of the home sales price as a grant or loan. Many of these loans are silent second mortgage loans, meaning these are loans that never have to be repaid if you remain in the home long enough. If you're using a low down payment FHA mortgage, a down payment assistance program could potentially cover your entire down payment, leaving you with zero out of pocket. There are hundreds, if not thousands, of programs nationwide, each with their own guidelines, with assistance available in every state. The amount of money you could get varies by program, but as just one example, one down payment assistance program here in the New York City area is known to offer up to $100,000 as a grant to eligible home buyers. Other states may cap assistance at $15,000. The important thing to know about these programs is that you don't have to figure them out all by yourself. If you're hoping to qualify for a home buying grant, the best first step that you can take is to contact either your local housing finance authority or your mortgage lender. Although these methods allow you to avoid upfront payment towards the purchase price, it's important to remember that you still have closing costs to worry about. These usually amount to around 3 to 5% of the purchase price and cover various taxes and fees, such as loan origination fees charged by the lender, along with third-party fees for items like your credit report, home appraisal, title search, and underwriting fees. In total, that's about $15,000 to $25,000 for a $500,000 loan. Fortunately, there are a variety of ways to get help for your closing costs as well. First is that most down payment assistance programs can be used for closing cost assistance too. However, the grant or loan you receive likely won't be enough to fully cover both the down payment and your loan fees. As such, you may have to pay the remainder out of pocket. Another option to cover your closing costs is to negotiate with a motivated seller to have them pay for it. The way this often works is that you pay a little more for the home and the seller kicks back that extra cash to cover your fees. You're essentially rolling the cost into your mortgage loan when you go this route. Lastly, why not ask your lender to pay some of the fees for you? Some mortgage lenders offer incentives to home buyers. They might be willing to cover part or all of your closing costs. This can be helpful if you're short on cash, but be aware that no closing cost mortgage usually come with a higher interest rate, so you could pay significantly more over the life of the loan. Assess your options wisely and choose the best outcome for your particular situation. And that's all, folks. If you're interested in purchasing a home with no money down or have any questions left unanswered, our team is here to help. Links and additional information can be found in the description below. If you found value in this video, please hit that like button and don't forget to subscribe for more informative content, and I'll see you in the next video.